Hello and welcome, Interest TV viewers. Today we are covering Purmo's Q3 results with the CEO, John Peter Leesi. Welcome, John Peter.
Thanks, Olli.
First, you could summarize the Q3 results and kind of the highlights for the quarter for you.
Yes. The highlights of the third quarter of 2022 is that we saw a weakening demand environment, especially in the radiator business. However, second point is that we had strong development in our ICS business in the solution sales, selling complete solutions for energy efficiency. That developed really well. Thirdly is that we had margin pressure in the overall business due to volume drops, but also then high raw material prices. And we also have launched a program which addresses an acceleration of our strategic execution. And we do that because we see the opportunity and possibility of doing it. And we had also to adjust our organization to be more strong and fit for purpose. So those are the four things we've done. But having then seen the development in the third quarter and also the visibility of the fourth quarter, we see a deterioration in the market environment. And therefore, this gave rise to us giving a revision of our earnings outlook for the full year 2022, where we took it down from previously saying we were going to be comparable with 2021. Now we say we're going to be in the range of 88 million to 96 million in adjusted EBITDA. And as a response to that, we have then taken additional measures to improve profitability already starting in the fourth quarter.
Yeah. We could talk a little bit more about the revenue. It was declining 1% year over year in Q3 now. And after H1, which was then growing quite rapidly, what was kind of behind this kind of sudden shift in the revenue? Was it only volumes or was it also price increases kind of delaying?
Yeah, it's a good point, Olli. I think that if you look at our two businesses today, the volume deterioration in radiators was 33%. So in the third quarter, 33% down compared to the third quarter last year. That translated to 17% net sales drop in the radiators business. That's the big one. If you then look at our ICS business, where we have the solutions business as well, grew with 24%. So there's one is down and one is up, but overall it is minus 1%. I think that the main reason for the sales drop is the volume. And with regards to the price implementation, I need to clarify the point which we did during the call, but it is that we have announced, agreed, and negotiated all the price increases. But due to the downturn of the volume, we still have old orders at old prices that we need to deliver on. That's why we see a delayed impact in our profit and loss of the price increases. But they're already agreed and negotiated.
Okay. Then let's move on the profitability side. It weakened from the last year's in Q3. What was kind of behind this also sudden shift in the profitability? Was it only driven by the weaker market and volume decreasing in the radiator business, or did kind of the market environment uncertainties like inflation had any effect on you?
I mean, the main reason for the earnings drop, there are two main reasons. One is, and we're repeating ourselves, but it's helpful, is the big volume drop. It creates, of course, inefficiencies in our whole manufacturing apparatus, right? So it drives under absorption of costs. So that is one reason. The other reason is that the raw material prices were peaking in the third quarter. We're buying at previous quarter's average, and Q2, that's when the steel price was at its highest, and that's what we bought to at Q3. So the raw material prices are at its highest. And remember, as I said in the previous question, the price increases will be more visible in the fourth quarter and going forward. So those two effects, volume and raw material price increases that are not fully compensated in the third quarter.
All right. Then lastly, we could talk about the outlook, and maybe you can divide it to the volume kind of market outlook and maybe your own outlook regarding your guidance for the Q4 and for the whole year 2022. What are you seeing at the moment in the market and in the future?
Yes, important question again. If we take it business by business, so the radiator business, and we talk about the market. So I repeat again, it's the market I'm commenting now. And what we saw is a deteriorating development throughout 2022. First quarter volumes in the market for us was like 10% down, in the second quarter 20%, and third quarter 30%. Very much in line with the market development. What we see in the fourth quarter is a continued deterioration. So the fourth quarter market volumes will be lower, significantly lower than last year. Going into 2023, the radiator market has already had the brunt of this correction. But we still believe that the volumes will be slightly lower in 2023. That's the radiator markets as a whole. If we take the ICS business, but take out this special solutions business, we believe that the ICS business have had rather good growth. But when we're looking into the markets in the fourth quarter, you're actually going to see a slight growth in the fourth quarter in the ICS products. But then in 2023, the ICS business is lagging a little bit, so we're actually expecting that the market, and we're planning for the market being slightly lower in 2023 than in 2022. And finally then the solutions business, which is then driven by energy efficiency and heat pumps, etc., has had a very strong development. The market has grown 30% overall, and we see that market growth in the fourth quarter and in the 2023, we believe that market is going to continue to grow, maybe at the lower pace in 2023 than what we've seen in 2022.
All right. Thank you, John Peter Leesi. That clears a lot.
Thank you.